everyone. Welcome to Unchained, your no hype resource for all things crypto. I'm your host, Laura Shin. Thanks for joining this live stream. Before we get started, a quick reminder, nothing you hear on Unchained is investment advice. This show is for informational and entertainment purposes only, and my guest and I may hold assets discussed in the show. For more disclosures, visit unchainedcrypto.com. Introducing Nexo, the premier digital wealth platform. Receive interest on your digital assets. Borrow against them without selling. Trade a variety of cryptocurrencies, all in one platform. Now available in the US. Get started today at nexo.com/unchained. Quick note before we get into today's episode. Bits and Bits now has its dedicated feed. We're spinning off from the Unchained feed and moving to a new podcast and YouTube channel. So if you want to keep up with our weekly live streams and macro meets, crypto breakdowns, make sure to subscribe to Bits and Bits directly. We won't publish there until March, but subscribe today so you can be ready for launch. Be sure to subscribe to the new feeds at unchainedcrypto.com/bitsandbits. Today, we have a two-part interview all around the topic of where is Bitcoin headed? Here to start the discussion are Will Clemente, investments at STIX, and Joe Vezzani, co-founder and CEO of LunarCrush. Welcome, Will and Joe.
Laura, thanks for having us.
Great to see you all.
Yeah. So we're coming off a weekend that saw the US and Israel attack Iran, taking out its leader. This is at a time when it seems like Bitcoin just couldn't catch a break, even as we saw other asset classes taking off. Bitcoin surprised a little bit this weekend. It actually jumped. It didn't dump on the news, though a majority of those gains have since evaporated. I was wondering what your thoughts were on what we saw there in terms of the Bitcoin price and what you think that says about how Bitcoin will perform for the rest of the year. And Will, why don't we start with you?
Sure. I guess we can go back towards the start of the year. I would say towards the turn of the year, I became relatively cautious on risk in general. I've been kind of shifting my focus towards commodities and energy since the back half of last year. Some of the oil producers, commodities, as well as recently natural gas over the past week, but maybe we can get into that. I think as it pertains to Bitcoin, I think you've kind of had a confluence of things. You've had this overhang with the digital asset treasury companies, which built up a ton of leverage, and then as quickly as they kind of reflexively ran up and benefited the price of Bitcoin, you started to see some of the premiums to NAV flip negative or unwind, and we've even seen in some cases some of these crypto DATs even starting to sell crypto assets. So that bid is out of the market. You have the quantum fears, which I think maybe are just is just people ascribing a narrative to the price action. But I do think that has been something in the back of people's minds. But I kind of think the bigger one is just Bitcoin tends to kind of be the spearhead for risk assets. And we saw this, for example, at the beginning of last year, heading into February. Bitcoin led the NASDAQ down before the tariff crash, as well as started to show relative strength around the bottom before everything bottomed out before heading back up towards the back half of the year. So from my perspective, I think that part of this, large part of this Bitcoin price action was just, the far tail, furthest end of liquidity. I mean, of risk on the risk spectrum, and liquidity as well. Bitcoin was sold down first, and then now we're starting to see other risk assets, kind of follow suit. I've been relatively cautious heading into the new year about specifically the Nasdaq. I think there's some concerning things around the broader flows, regardless of your view on AI specifically. And we can maybe get into this a bit further. I want to leave some room for Joe, but I think for the Nasdaq, I've been concerned because the international or external flows into these large cap big tech companies, which are the majority of the where these flows are getting allocated to, because there's so much concentration in the market. Those are slowing on the margin and gone into emerging markets. While at the same time, you've had the domestic internal flows within the U.S. slow down because the buybacks have been slowing from these big tech companies that were previously these cash flow generating giants, just piling this cash flow into buying back stock. Those flows have also come down. So I think both the domestic flows within the US have slowed as well as the international flows. And I think that there's an argument to be made, again, similar to last year or other instances where we've seen in back half of 2021 actually was another good example where Bitcoin tends to lead risk. And then I think maybe some of these other things are people ascribing narratives to the price action.
Okay, so but then just it sounds like that makes you more bullish for the rest of the year?
From here, yeah, sorry, I guess I just explained where we are to now without the forward-looking part. I would say, I think at this point we have seen a ton of selling take place. I think a lot of the systematic selling has probably already taken place as we've gone down in basically a straight line from 125 to 60. I think the biggest driver of Bitcoin is real interest rates. If you look at 2021 or 2017. This was a huge kind of tailwind for Bitcoin, and if you look at kind of like the year-over-year change or however you want to plot it out, you can see that this is a big driver of Bitcoin's price action historically. When we look at like the 2022 to 2025 period, I think a lot of that was the institutional adoption, ETF flows, etc. But we didn't have that tailwind from real rates going down. I think now, at least on like an interim basis, on top of a lot of the forced selling having taken place already, etc., and you are starting to see, dare I say, some Bitcoin relative strength over the last day or two, where you think Bitcoin would be down more today. I think the outlook for real rates is skewing in Bitcoin's favor. If you have inflation picking up, Warsh is expected to be cutting. I mean, Trump put him in the chairman seat literally for the sake of cutting. So you kind of have this setup where the Fed is going to be cutting rates towards the back half of the year once Powell is out. At the same time, we've seen based on ISM and other economic readings, we're starting to see the economy reaccelerate, and commodity we've seen commodity prices run up, and now this geopolitical uncertainty on top of all that. I think that's a recipe for lower real rates, which should be a tailwind to Bitcoin, or like at a minimum, give it some type of kind of relief rally, maybe on like a midterm basis. So that's kind of how I'm thinking about things, as we head into kind of the middle of the year. But from there, it's hard to say. There's so many moving pieces at the moment.
And Joe, what about you? I guess it is a two-part question, as Will pointed out that I'm sort of wondering like what you have thought of its price action so far this year, especially amidst what happened last weekend, and then how that sets us up for the rest of the year.
Yeah, Will brought up a bunch of great points. I think whenever you have kind of negative sentiment, but the price is kind of holding, right, or you have a little bit of uncertainty, and the price seems to be kind of holding, right? This uncertainty with a war in a region. I don't even know if you can call it much of a war, or more of a a planned removal of someone in a country, and then you've got the price kind of moving up a little bit here, moving back, moving up, but not, I would say, any sort of major volatility. We're back up to 68 here. There were some talks around how people can mine Bitcoin for $1,200 a coin in Iran, and what would they how would that change anything? I don't really think that that's going to have any sort of effect. I don't know why any of that would change. But I think the overarching sentiment change that I'm feeling in the market is that there seems to continue to be negative kind of sentiment, but the price seems to be holding, where before, even good news, the price would be dropping. Right. And so I think that's the kind of the big difference in the sentiment of the overall market that we're seeing. I mean, that's what we look at, at LunarCrush, as we're trying to understand like what people are feeling on a broad scale, like how, what do 50 million people think about this? Right. And so that's kind of the small change that I've seen in the sentiment, is that people are bullish. Again, there's, I would say Bitcoin, and then kind of the broader altcoin market. You're seeing some new projects being launched. You're seeing, capital being raised. You're just seeing a couple more sparks that are out there. I think we're finally kind of seeing this convergence of AI agents and crypto happening, right? So I think that that's going to take on an interesting form there. There's going to be, companies that are going to be launched and trading models and, prop trading firms that are agent driven that are being launched. And what is that all going to mean, for the activity in the market? What's that going to mean for, stable coins, which a majority of this is going to be transferred and moved around with? But then also, what does that mean for risk assets where people want to see, alpha, and they want to actually see some appreciation in their capital? They're going to be wanting to invest in these projects. So I see a lot of those kind of small, just on a small scale, some of those things happening, which I think is the driving this underlying, I would say, holding for Bitcoin. But we're by far from like overperforming in any way, shape, or form. And then some of the stuff that Will was tapping on a little bit here, with rates potentially coming down. I think, we had like a ZERP period, where things were just kind of going crazy. When you have all this money influxing into a system, yes, you're going to see this kind of crazy appreciation. Rates are, it's still 6% to buy a house, right? Rates are kind of, you can tell that the banks are trying to get competitive a little bit there, and they're trying to kind of bring rates down. People are sitting on a ton of cash in their money markets, right? None of that money has flown back into risk assets. It's going to have to. And I think like a big wild card here is, Trump got elected on the backs of Bitcoiners, period. Right. And we really haven't seen anything that would say, hey, here, we're going to try to help you. I know he's pushing, right, for the strategic reserve, but I think we need, and I think he will do something big this year with regards to Bitcoin. And I think he has to, just based on where the cards have all fallen, right? And when you look at even some of I think the people that, some of the DATs and, some of the Bitcoin, strategic reserve companies that have been out there that have helped, with that, specifically people like maybe Anaka, right? Like a lot of these people helped lift someone up to literally get elected the president of the United States of America. But, it does feel like it's been a little bit of a one-sided deal thus far. I think they know that, and I think they're taking their time, and I think that's fine. But I think we're going to probably see something big. I know they're trying to push with the Clarity Act, and I know, Coinbase is lobbyists, and they want what they want, and I think that's fine. At some point, we need a deal. But I think that there's going to be something big there. So I think the tailwinds of the economy, AI's injection into everything is really interesting, right? Like that's probably all we're going to talk about, for the next like 18 months of our lives, is how that's changing everything and how we're all adapting to it. But I think if it makes what you're working on better in a way, and I think it does make crypto better, that it's going to be really interesting.
Okay. And just one quick question about the sentiment piece. Did you interpret that as like, that means we're at the bottom if Bitcoin is at this price, but suddenly sentiment is like more positive than it's been? Is that how you're looking at that?
It definitely feels like we've bottomed, right?
Interesting.
Based on, even risk on type news is not pushing Bitcoin down, where even before extremely bullish news would push Bitcoin down, right? It means it was out of favor and people didn't want to buy it at that time. At this time now, it's like it's kind of like shrugging off all this news or any sort of geopolitical, uncertainty that's out there. And so that just kind of tells me that I think people are buyers again.
Okay. So I do also want to ask about something that's a little bit, I think, puzzling. It's long been said that Bitcoin is digital gold, but I'm sure you know that right now, Bitcoin is not acting like digital gold. Gold is acting like gold, and Bitcoin, I don't know, what is it acting like, or what do you think this means for Bitcoin's digital gold narrative to watch this price action?
You want me to? I can hop in first. I think, man, if I'm Peter Schiff, I'm a happy guy over the last like 12 months. That's for sure. Right. But he's right now. It doesn't mean he's right long term. But it probably feels good to be right now, I bet. I think this was a really interesting lesson that we learned, is that it's still early, right? There's still, even though we got this ETF and we thought we were fully institutional and mainstream and it was going to be amazing, and Bitcoin's the new gold. I think Bitcoin is the new gold is a great narrative, that a lot of, I would say, the big exchanges were pushing to try and get institutional players to understand what Bitcoin actually is, when in reality, it still kind of trades like the most volatile, like, tech stock. which is fine. And I think it just means that we're still a little bit early on it. But, when people want to flee to something, they fled to gold, but it's, even holding the actual physical asset of gold is not like a plus for people, right? Then you have to like sell it somewhere, or it's heavy, you can't move it. The people that did well were the people that bought like an ETF of gold, which is like a digital gold, right? So it's like, that's kind of like the juxtaposition of that. But I just think it's something for people to bet on, when things go awry, right? Just
But
like
you mean
prediction markets
gold.
are. Yeah. It's just,
Right.
it's just a fake thing that's digital, that's out there, that people agree on, that they can invest in, which in a way,
Okay.
like you could
Yeah,
say Bitcoin would be that too.
yeah, I
Right.
know. I
But
was just gonna say
yeah,
people would say the same thing about Bitcoin.
right. Right.
Will, what do you think?
I think you bring up a good point, Joe, about the transportability of gold. I think right now I've numerous friends over in the Middle East, specifically over in the UAE, and some of these guys are looking to maybe switch locations for the next week or two. And I'm not saying that any of them are have a ton of physical gold or something, but just in theory, if you were some like wealthy person in like this region of the world right now, and you're like, hey, I want to move, bring my assets and, get out of Dodge for 2 weeks. You can't just take all your gold and move, but you can just grab your Bitcoin wallet and do that. So I think it's a great point. I think the big thing is just gold has been around for thousands of years. It has, this huge Lindy effect. It's, throughout history, always been a store of value. This is something that people have always flocked to as, a safe haven throughout history for a variety of reasons. It is, provably physically scarce. Also, we have to keep in mind that the people that are allocating large sums of money are quite older than somebody like me or even Joe. So I think, these people don't have a level of comfortability with owning digital gold. And, Bitcoin has been around for a little bit, but it's only been around for 15 years. And so I think in the grand scheme of things, it really boils down to kind of the Lindy effect that gold has, and the long history it has of being a store of value asset. Whereas Bitcoin just doesn't have that. It hasn't been through numerous tests of geopolitical tensions or periods of inflation or deflation or whatever other reason that people flock to a safe haven asset. So while I absolutely fundamentally believe that Bitcoin is a better version of gold than what gold is, while that is on one side of my head, the other is I'm aware that maybe for the next whatever it is next decade or so, the people that are at the helms of allocating capital don't see Bitcoin as this safe haven, and that's okay. That's not to say over the long term that it can't be. As Bitcoin is around for longer, also, there's this huge wealth transfer that will take place. Wealth inequality is the worst that it's ever been, but, people aren't going to live forever, not to be morbid, but in, 20, 30 years, that wealth is going to transfer down to younger generations that, are at the helm of allocating the capital. So I think, part of it is just, it'll just take time, but I think it's very evident that the bid from gold has been from mostly central banks, sovereigns, etc. Gold typically is very correlated to this real interest rate thing that I was just talking about a moment ago. It almost tick for tick throughout the last 50, 75 years follows real interest rates. But after 2022, after the U.S. froze Russia's FX reserves, I think that started to be a huge signal. I think that was a strategic mistake personally, to pull out this like nuclear button of using the financial system against Russia. But all right, after that, you started to see gold as it trended up decouple from real interest rates. So I think that's a very clear signal that people are buying gold because of this kind of like central bank diversification, whatever you want to call it. People viewing maybe the U.S. as slightly less of a safe haven on the margin. The culmination of these things, but that hasn't been to the benefit of Bitcoin, unfortunately. But I think over time, as that wealth transfer takes place, at some point, it will get treated that way.
And what do you guys both think about this notion that we've seen on Twitter that the quantum risk that Bitcoin faces is also depressing the price? Do you think that's true or not true?
I think it's a little true, but I think that people just kind of ascribe things to the price, right? Like the price does something, and then everybody's like, "Oh, this is exactly why." It may be a factor. Maybe sovereigns were somewhat disappointed, or that had been dipping their toes in the water, supposedly, or whatever other large entities maybe had started buying some Bitcoin, and then saw it wasn't really behaving like gold, and then on top of that, there was this quantum thing, and they're like, all right, forget it. Like, let's just get out of this for now. I think it maybe plays a role, but I think people are probably like making it a bigger thing than it is, and just kind of, putting a narrative to the price.
Joe, what do you think?
Yeah, I think the last time we heard anything interesting on quantum was when Google came out with a report, and in their actual published report from the company, they said that they did a calculation that, in this universe, the universe that we have has not even been around long enough for them to complete that calculation, so that they think that some of that calculation was done in other dimensions. Right. So I think that's where we are with quantum. So like, I think anyone that, is on Twitter specifically, probably doesn't have a good grasp on exactly the effect that it's going to have on Bitcoin specifically.
Okay. And Will, so I know you can't stay with us for the full hour. So I did want to ask you about a piece that you wrote recently, which covered like different economic and technological pressures that you see as bearing down on Gen Z. And actually, also, I would say from the Citrini article, we know maybe it's not only Gen Z. But talk a little bit about, what these changes are and how you see that as affecting what would be the typical path to success for a Zoomer like you?
Sure. Yeah. I kind of put this together because I hadn't written in a while, and I also had just kind of a culmination of thoughts, just talking with my friends, who a lot of them, skew kind of on the younger age of the end of the spectrum, about a lot of these ideas. I think it affects people in the U.S. Or young people in the U.S. as well as people around the world. But the idea here, and we could probably do a 30-minute segment, so I'll condense this down into 5-10 minutes max. I basically wrote through a lot of the issues that the younger generation is facing. I think every generation faces a slew of issues, their own unique set of challenges. I also think that Gen Z has a lot of things that are to their favor. Unlimited access to information on the internet, AI. The standard of the average median and average standard of living continues to go up, both in the U.S. and around the world. So I'm not to say that, like, oh, boohoo the Zoomers, but I do think that there's this set of issues that they kind of face. So overall, when you look at like the big picture, that wealth continues to get concentrated, and wealth inequality continues to grow. That's mostly skewed towards asset owners, non-asset owners, but that's also become this kind of older and younger generation thing. So there's different measures you can look at it, but the one I put in here is just the percentage of net worth held by older people. The amount held by people under 40 is the lowest it's ever been, therefore above 40. But specifically when you get above the age of 55, it's 75% of the nation's wealth is held by this older cohort of people. So you've got this underlying thing of this huge amount of wealth inequality. I think a lot of that has been driven by monetary policy, the bailing out of the financial markets in 2008, which was kind of to the short-term benefit of asset holders. I also put in here the offshoring of labor, and included manufacturing jobs. So you can see after NAFTA and then China entered the WTO in the early 2000s, the manufacturing jobs in the U.S. completely dropped off a cliff. So that's one thing. The other one I put in here was the government backing of student loans. So I think this one kind of ruffles some feathers, but I think basically the government should not. I'm aware that the government enabled a bunch of people to attend university that wouldn't have been able to otherwise. But it's my view that I think the deprivatization of the student loan system was ultimately to the detriment of new students and to the benefit of universities, and also to the detriment of taxpayers. Over time, we've seen the cost of tuition continue to go up. You look at debt, for student debt as a percentage of the median salary fresh out of school. That's gone up only over the last 50 years since the government started subsidizing student loans. I think in a perfect world, and in the privatization of student loans, the bank underwrites you as if they underwrite any other loan. They look at your ability to do well in school and get a job after. They look at the type of degree that you're getting, and then they underwrite you based on that. Whereas the government just has been writing blanket loans to everybody based on whatever tuition, and it's very clear that there's a big bifurcation in the ROI by degree. Number one being computer science, engineering, nursing, and computer science maybe now, as well as finance. Maybe we'll get hurt by AI. And then when you get into kind of more of the fine arts, the philosophies, the sociologies, films and media, there's just very clear. It's just the data have negative ROI. So it doesn't make sense that the government, I think, is doing this blank underwriting of everything. And then the monetary debasement piece I put in there. Another one I think is important is the amount of time that companies are spent in the private market and the lack of price discovery in public markets. So go back to like the 1980s, you could have bought Apple pretty cheap, I think, this as a penny stock, or Amazon in the early 2000s. I just don't think that there's as much opportunity to get exposure to great American companies at cheap prices, or at least we kind of have this fractal that's come about where the company IPOs, bleeds out for 2 years, and then kind of finds a bottom and then continues up. But most of the price discovery leading up into the IPO process has all got shifted into the private market. And so with Anthropic and OpenAI and SpaceX, which is going to supposedly IPO at like almost $2 trillion. And I think that's the detriment of the average American. I think it'd be good if everybody, and I understand why there's investor protection laws, but it doesn't make sense to me why you have the proliferation of sports betting, which has now got like fully integrated into like entertainment networks, as well as prediction market advertisements getting shoved down the throats of Zoomers. I think if you're going to enable these things, then from a double standard standpoint, you should also be allowed to invest in these great private companies in the U.S. And if you're able to get these people more involved at an earlier stage, then it would be to their benefit. Wealth creation for everybody, as well as just aligning people with the long-term fruits of the country, and that also ties into the wealth inequality piece. Getting priced out of assets because of the backstopping of the system, etc. And then the last one I put in here was the rise of AI and robotics, which I don't really need to get into. The AI models, if you look at it, on like a time action, amount of time spent per action basis, the models are basically going exponential. And then at the same time, we're expected to see the build out of humanoid robotics. China is seemingly ahead of the U.S. For now, but over the next 10, 15 years, I'd expect that would also ramp up as well. So you have the combination of those two forces. So if you want to go into the depths of it, feel free. It's my pinned tweet, but that's kind of the high level of the issues. And then I just put for potential things that people can do as a Zoomer to combat some of these issues and set yourself up for success. I just put assess your degree deeply. Does it have like real ROI? Or for example, I dropped out of school. I frankly didn't do my best work in high school, and didn't set myself up to go to a great university. And I was very fortunate with the Twitter stuff, and had a personal distribution that I could use to build a business, or meet people, etc., and find employment opportunities. So I'm aware that I'm like a one-off thing, but I dropped out of school largely because I just realized that the ROI wasn't really there, at least based on where I was going to school at the moment. The other thing I put is embrace AI. You can basically have it code anything now. Pretty much almost anything that touches software will probably be somewhat displaced by AI in the next couple years. And then I also just put seek to build advantages in personal distribution. If you can build out a niche social media presence, that'll be a huge competitive advantage. If code is basically getting commoditized, then the competitive advantage becomes distribution. And the final ones I just said, stay nimble and pay attention, and the world is rapidly changing.
Yeah, the two things that struck me were the bit about the student loans because, yeah, once you kind of like guaranteed these colleges they were going to make money no matter what, like it just, in a way, like kind of created a grift, which I had never really thought about until you pointed, I read that. I don't know if this is like a common thing that, because I tend to really pay attention to crypto and not so much the wider world of finance. Maybe other people already had seen that, but that was new to me. But the other one really was like, I remember that Jeff Park came on the show and he talked about how, I forget what he said. Like, I think it was like before, some world war, or I don't know, it was like a long time ago, like the 1920s or whatever. But he basically said that like at that time, most businesses were like small businesses. Like very few people worked for these gigantic corporations and stuff. And like when I read your essay, I was like, oh, this could lead us to go back to that where everybody kind of, has their own little business and it's just around them and like their AI agent or multiple agents or, whatever. And there's less of this like gigantic corporation type of job. So anyway, well, that was super interesting. Thanks so much for sharing. I know you have to run. So I'm just so happy that we got to hear your insights, and we will catch you next time.
Sure, absolutely. I don't think I've done a podcast in, I don't know, 3 or 4 months at least. So
You should do more. Well, that was really good, man.
Thank you.
Yeah.
Thank you. Hopefully I'll get to talk to you guys for longer, but appreciate you having me on, and I'll be back soon.
Okay, great.
Cool. Thanks, guys. Have a good one.
Thank you. So next up, everyone, we'll have part 2 of our discussion, and that will continue to cover where the Bitcoin markets are headed. But first, we're going to take a quick word from the sponsors who make our show possible. Step into a new era of wealth. Discover Nexo, the premier digital wealth platform. Manage your crypto portfolio with confidence and control. Receive interest on your digital assets. Borrow against them without selling. Trade a wide range of cryptocurrencies, all in one platform. Now available in the US with 30 days of exclusive privileges for new clients. Experience Wealth Club Premier. Access enhanced interest rates, reduced borrowing costs, and crypto cashback on swaps. Get started today at nexo.com/unchained. Quick note before we continue with today's episode. Bits and Bips now has its own dedicated home. We're spinning off from Unchained and launching a standalone podcast and YouTube channel focused on the Fed, macro, AI, and how it all collides with crypto. If you want to keep up with our weekly live streams and macro meets crypto breakdowns, make sure you're following Bits and Bips directly. We won't start publishing until March, but getting set up now means you'll be ready on day one. You can find the new Bits and Bips channels at unchainedcrypto.com/bitsandbips. You can also find us by searching Bits and Bips on YouTube, Apple Podcasts, Spotify, or wherever you listen. Back to my conversation about the Bitcoin markets, this time with Marcus Wu, market strategist at Delphi Digital, joining me and Joe. Welcome, Marcus.
Hey, nice to be here. Thanks for having me.
So we've been discussing what's been going on with the Bitcoin price, and we cover so many things. But I'm just curious, what's top of mind for you when you're watching this price action amidst, obviously war, and also these rumors around Jane Street, and people talking about the ISM metrics, or Bitcoin miners, maybe like Bitcoin miner Mara, maybe starting to sell some of its Bitcoin, or at least considering it, et cetera. So there are so many things. The fear and greed index is obviously very firmly in the fear range right now. So what are you watching?
Yeah, sure. So I'd like to touch on a little bit more about the Jane Street piece. I think it's interesting how this news gets released when Bitcoin is down like almost 46% from its all-time high. I mean, it's just a coincidence, right? Like a lot of people are attributing the current, small upside move for Bitcoin to Jane Street. But I think it just so happens that Jane Street's news gets released near the bottom range, right? So that could be easily like a bottoming process from this news itself. And then this, to my view, ties over to what we're seeing in the Middle East right now. Just like similar to how Bitcoin has topped in the past. We got a slew of good news last year, and Bitcoin's price didn't move anywhere, right? We were hovering around 125 range. We had a lot of positive movement on several fronts, such as the more Direction Under Clarity Act, and we didn't see any move continuing to go to the upside. So I'm seeing similar things to the downside too. We had this new tensions come up this week, and Bitcoin has held steady above the 60K range. This to me is also like just some signs to look for in terms of the general local strength, I call it, in Bitcoin's market right now. So that to me is pretty surprising.
Okay, so I did actually want to ask a little bit about the Jane Street thing. I had actually meant to ask Joe about it when Will was here, well, Joe and Will, but it didn't get a chance. That came out and then it created a huge stir, went super viral. And, just to fill in anybody who didn't see this on Twitter, basically, the theory by author Justin Beckler was that because Jane Street is an authorized participant for the Bitcoin ETFs, he wrote, quote, "The firm has every incentive to use its privileged position as an authorized participant to suppress the spot price, trigger liquidations, and harvest the spread." And what he was pointing out basically is like, it has to make certain disclosures, but overall, those disclosures don't show what its real net exposure is to Bitcoin. So he was kind of like positing that they're sort of like dumping on the market to profit. But a lot of people who are much more, or I shouldn't say much more, I just mean they're very knee deep in the ETF world, like Eric Balchunas of Bloomberg Intelligence, he just covers ETFs. And then some others like Jeff Park from ProCab, Rob Haddock from Dragonfly, they all said this didn't seem plausible to them. But what was interesting is like, even when Jeff Park wrote his response, he wrote, quote, "No AP explicitly suppresses the Bitcoin price. What the AP structure can suppress is the integrity of the price discovery mechanism itself." So that was interesting because he's basically saying, well, actually, he finishes. So he says, he asks, quote, "whether a regulatory framework built for traditional ETFs is the right one for an asset whose entire value proposition rests on being outside the reach of exactly these institutions." So that was fascinating to me. Yeah. So curious to hear you guys, like, do you guys think this theory is plausible, or do you agree with, like, I think a lot of people that it's not, or I don't know. What are your thoughts?
I mean, when you look at any Wall Street firms, especially ones that are involved in, quote, like market making, right? They're making the markets. They're the ones that are creating the order book, and they're still competing. But if you do it right, I mean, it is an infinite money glitch, right? And so I think, is it plausible that a company that is one word away from Wall Street, maybe acted in a way that they shouldn't have? I'm not implying that they are, even at any point. I know it's still going to be under investigation, but the history of Wall Street is that they cut corners, and they're trying to find any way possible to make a profit, right? We saw this obviously in 2008. I mean, the downfall of these major, huge institutions that no one would have ever thought, were, it was basically a collaboration between, ratings agencies and creating collateralized debt, everything, right? We've seen that already. So do I think it's beyond them to, manipulate an asset that can be manipulated? Absolutely not. Right. And when I say them, I don't mean Jane Street. I just mean Wall Street or anyone that's trading. So if there are, I don't think a suit would be brought forward in a way if there wasn't like some there. But again, we just don't know, obviously, until things come out. But that being said, there was definitely, and everyone, I mean, every, podcast I went on, all the Twitter spaces, I've done a ton of like the town hall Twitter spaces that are out there. And for months, everyone's like, what is happening? Right. Everyone was like, this is so confusing. You have like everyone under the sun just scrambling to like buy Bitcoin, to buy the ETFs. Everyone, is doing this. And, somehow the price is falling. Right. Somehow.
Wait, just for the time frame, are you talking about only post 1010? Or are you talking about even before 1010?
Even before, it took a minute. I think the DAT rush drove Bitcoin up to that one kind of 26 mark. But even before that, we were kind of hovering in some of these states, and we're like, what? Like, how is this even possible? Like, who is selling Bitcoin right now? And so if they found some sort of way or some trade that was out there to, hey, if we dump at this point, we can push the bots to do this and we can make this spread. Of course, that's what they were doing, right? Whether or not like it's illegal, right? Like it's probably not illegal to know that, hey, if you're selling and triggering the market to do a thing, right? Like, I don't think that's insider, but again, like what did they know? Who were they talking to? I'm sure there's a lot of emails that have been gone through. But it's great to have people, if they are acting like that, out of the market. And so I think that's why you saw the price actually move up, because the market might have agreed that something was happening that they weren't comfortable with. And now maybe they're a little bit more comfortable with entering the market, knowing it's not being manipulated.
Marcus, what do you think?
I generally agree with what Joe said. Hot take here, I think 1010 would have happened in some way or another, regardless of what Binance did or whoever was responsible for it. I think, for example, companies like Jane Street can do what they do because a narrative exists, right? And we have seen like massive selling pressure coming from Bitcoin OG holders. So I mean, I do believe that there may have been some sort of price suppression going on with what Jane Street was doing, but we just looked at the facts here. Like ever since we've peaked in October, there's just been massive amounts of selling. So I think Jane Street was able to ride this narrative wave of this cascading of like Bitcoin sellers, and then find spots of weakness to do what Joe was talking about. But I do think where we were at in October left us in a pretty precarious spot, right? We generally saw macro conditions not as strong as before, and liquidity wasn't flowing in crypto, right? So like it or not, whoever was responsible for 1010, I believe, would have manifested one way or another, right? Be it Binance or some other event triggering this massive liquidation. Because I do think back sometimes and think back like what would have happened if 1010 didn't happen? Like where would crypto be? But I slowly came to the realization that maybe the question is not what if 1010 didn't happen, but what if something else replaced 1010 entirely? Because if there's an exploit to be found, like it or not, this is crypto, it's open source, whatever. Somebody would be there to extract value. So I think building off from here, we're generally in a healthier spot than we were in October. But yeah, that's my view on Jane Street and stuff.
Yeah.
Another piece to it really quick is, like this is like Terraform Labs and Terra Luna going after this, right? And so, that I think that's even the bigger question for everyone is, did something happen there which eventually created a downfall? And if we don't have Terra Luna happening, right, then maybe we don't have FTX happening, right? FTX has a liquidity problem, but they did invest in Anthropic and Robinhood, and if the lawyers didn't take their $1 billion cut and they just let it fly, right? They would have, everyone that owned anything FTX would have like a 10 or 20x by now. And then a lot, like, we don't know what would have happened. So it's like that's an alternate like universe. Like we don't live in that universe. But I think that's kind of where a lot of people in crypto are kind of like, wow, we might just be living in an entirely fraudulent system, right? Like that from outsiders. And so it's an interesting thing to think about. Obviously, we are where we are today. And yes, I completely agree. Anything that can be exploited will be exploited in the system, but maybe it would have just not happened in such a waterfall effect on some of these days. And I think that's the scary part for some people in crypto. If the stock market starts to fall, there's breakers that go off. It can't, everyone take a deep breath. Like, are you sure you want to be selling everything? That doesn't happen in crypto, right? It is just a cascading domino effect when things happen, which I think is good. I think too big to fail is not a great thing for society in whole, but that's just the market that we're in.
Yeah. I mean, it's funny for me. So where all of this also is happening around the same time as like the whole Epstein files thing and all that. And I sort of feel like So I can look at people like Eric Balchunas and I'm like, okay, this guy, he's been covering ETFs for so long, like, you know, he doesn't see this. And I can give a certain amount of weight to that. But then, you know, when you see such huge revelations coming out about some of the most publicly visible people on the entire planet who have been holding up some kind of charade or whatever for decades, like, you're just like, okay, well, how much, you know, credence do I give to the so-called experts who think they know what's going on? Like, you know, so I'm not saying anything about the Jane Street rumors themselves so much as just like I almost feel like we live in an environment where you just you end up questioning so much. How can you know what you think you know? And how much of what you think you know is actually true? Like, so those are, you know, some things that I think are just sort of in the zeitgeist and maybe fuel the virality of theories like that. But one other thing that I wanted to pick up on from what Marcus said, which was so interesting, was just this thought experiment of what if 1010 didn't happen? But like, what's interesting to me is like, it would have happened in some respect, right? Like there would, because so if we didn't have like those mispricings or whatever on Binance, it just would have been smaller. So like, instead of what was it like, was it $190 billion in liquidations that happened? Was that
I think it was
I
around
forget
40 billion. That was, I think,
oh, sorry, it
like
was
the estimate
19
number.
billion, not 100. I was like, okay, 19 billion. Thank you for jogging my memory. Anyway, point is just, so, you know, then what would it have been? Like, would it have been 3 billion or, you know, I don't know what, I don't even know if anybody's tried to do a calculation like that, but the point is just that, yeah, it sort of feels like there was some sort of comeuppance for crypto that would have happened, but due to, you know, some yeah, it's funny. I was going to use the word errors, and then I remembered because Binance had publicly signaled that it was going to change how it was priced. I don't even remember all the details. It was like something about how they were pricing something, and in a way that provided a window when, you know, the person who made a lot, or the entities that made a lot of money from that were able to make even more than they probably would have otherwise. So anyway, all I'm trying to say is, you know, first of all, let's just focus in on 1010 a little bit. So, as I'm sure you're well aware, there's been 5 million theories about what happened since then. And I'm curious to know what you think happened, and, you know, how quickly you think Bitcoin will recover.
Go ahead.
I think, so about 1010, I think what happened, just based off the sequence of events, was that Binance said that they were going to upgrade their USDE contracts. Like they were migrating from an old version to the new upgrade. So they let everybody know that like this is the period. I think it's internally. It wasn't even public news that they're going to do this upgrade, and just based off theories, right? Somebody or some group got knowledge of this upgrade and was able to exploit the USDE contract by depegging it basically. And that caused the whole, you know, charade that we know about, that, you know, some of the blue chip assets like, you know, like XRP and a bunch of other stuff dropped like 40 to 60% in just like a handful of minutes. I think because of that really caused a lot of problems, and that really unraveled like what everybody feared the most, right? Like nobody's actually buying your bags. Like the demand for these are just market made, right? Like it's just bots or companies trading back and forth to simulate like this assets we're trading. So I think that really opened everybody's eyes for the first time. Like, holy, you know, maybe get buying like illiquid coin with a lot of money isn't the best idea. So that, in my view, was number one, capital destruction. A lot of people got liquidated. Number two, it opens people's eyes to, you know, see what you know, without these market makers, what volume would there be? And number three, if you look at a lot of these charts that put in this massive 1010 wick, a lot of them actually came back down to retest the wick. So I remember my experience, 1010, I was actually on a plane, and that liquidation happened when I was flying. So thankfully I had Wi-Fi, And my exchange allowed me to actually put some orders in to buy when the 10-10 wick actually happened, which I was pretty fortunate. But it's in my view that whoever was able to buy those 10-10 wicks, like what they said, like you got to fill the wick. So somehow or another, I think these market makers or whoever's responsible for pricing these assets or contracts sort of drove price down back to those wicks, because you can't just let people ride away with a 5 to 6x gain in such a short time. So I don't know, if you take a look at all these charts like Pump and several others, most of these charts are back at the 10-10 wicks, where we actually filled the wick, and some of them are even below. So going on.
So that's why you think that Bitcoin has just been dropping and dropping and dropping since 10-10. And so I don't remember what was the low of the wick on
Bitcoin's low for 10-10 wasn't even close to where we are right now. Bitcoin hit, I think, around 100.
104.
And then it bounced from there. Yeah, it bounced from 104 to 115, and then from there we fell off the cliff and we just rolled over. I'm talking about the altcoins, because the altcoins had the catastrophic drawdowns. Yeah.
Okay.
But where we go from here for Bitcoin, I think we range for a while. Like I built some models around this to try to see where we are at in a current cycle.
Wait, is this the same as your allocation framework or different?
Yeah, this is the game theory model that I've been building.
Yeah, describe this.
Yeah, so I basically built a model that uses game theory to look at Bitcoin's on-chain metrics. So what this does is basically let us know in game theory, there's two modes. It's cooperation mode, and then there's defection. So when we're cooperating, technically what classifies cooperation is generally low volatility, and a bunch of other on-chain metrics that signals to people that you and I are working together. So the base assumption is that Bitcoin is a scarce asset, and corporations and hedge funds and important people want to buy more of. And in order for them to buy more Bitcoin, they have to work with one another. Because if you don't work with one another, what's going to happen is you're going to have massive price spikes. So in game theory, in different regimes, right, based on people's preference, you either cooperate to buy Bitcoin cheap, or you defect, which means I buy Bitcoin first. And then because I buy Bitcoin and you're afraid that my buying would spike the price of the coin, you front run me. So both parties just front run each other, and that's why we see those massive spikes. So anyway, in this model, cooperation is low vol, defection is high vol. And right now we're in defection. So in each regime, there's different ways of trading it. So in defection regime, because it's high vol, and what I found is that in this regime, it's very mean reverting. The average mean return for this regime is around 0%. But then we have very wide standard deviation bands. So that basically just means that price is going really nowhere. So in order for us to go back into a cooperation, we have to first exit this regime in defection. And then there's all the numbers on that. What's the average time for defection to end, blah, blah, blah. But TLDR is cooperation has to first persist. And that persistence, I found, is to be around the 20 to 30-day mark. So right now we're nowhere in cooperation. We're still in defection. So that leads me to believe that there's still some more time to go before we actually see like a meaningful rally. It doesn't mean we can't have a relief rally. It just means for the rally to be sustainable and believable, it has to be in a confirmed cooperation phase, which takes time. And yeah.
Wait, so I'm sorry, go ahead and finish your thought there.
No, I was just going to say, like, I have a research piece coming out soon via Delphi. So if anybody's interested, that's where I dive into the mechanics and the math and all this stuff.
Okay, well, you said that you're using on-chain metrics, and obviously now we know that a lot of the activity is not happening on-chain, and there's like derivatives in the mix. Like there's just, and people are talking about this, about how this is like just creating some difficulty for the Bitcoin price. So how kind of like confident can you be that the on-chain metrics are going to be useful? Or, how do you think about that issue that we have, this whole other world that's not happening on-chain that's affecting the Bitcoin price?
Yeah, so for the on-chain metrics, I look at a bunch of stuff like OI, open interest, volatility. I look at exchange balances, what a whale wallet's doing. So, and then this is not just from a day-to-day, right? There's like a normalization period that I apply. So this goes back, a couple months. And I've looked at this data for the past 6 years. So this model is built on 6 years worth of data. And you know, where this model goes, like there's still some limitations, right? Like you just said, what if you know, the US just passes more laws on you know, perp dexes in the US and push, you know, perp dex volume over to those centralized exchanges, then we won't have those kind of tracking available. So there are still limitations in this model, but just based on what I've found, these on-chain metrics are still, you know, providing a wealth of information that we can look at. Like we usually see when on-chain balance spikes 2 or 3 days prior, price that follows usually is to the downside. Like that relationship still hasn't changed. Like we've seen big sellers selling on Coinbase and Binance. Those sellers have to deposit Bitcoin onto those exchanges. So you can still run away from that part, unless, you know, they're trading paper Bitcoin or something.
Oh, got it. Okay,
yeah.
that makes sense. And then one other thing that I was going to ask you was, so is this something where like it's just more for research purposes, or is this something where like people can use some kind of dashboard, or yeah, like what format is it gonna take?
We have, so I have the dashboard live on Delphi's site, and it's free for everybody to go visit. I'll share the link with you later. And what I'm personally doing is building trading strategies and deployment strategies, basically allocation strategies on top of this regime. So the first layer is just identifying where we are at right now. What regime is Bitcoin operating under? The next layer is to then layer on, okay, if we understand that Bitcoin is in a defection regime, we do not want to be holding spot Bitcoin for a long position. You want to do that when we are in corporation. So where we're in defection is scalping. So you know, you can make use of when Bitcoin's price is way above the standard deviation returns, and you can take a long or short and write it back to the mean. That's totally fine in that regime. So that's what I've been working on for the past half a year or something.
Okay, wow, so interesting. We're at time, but I had one last topic. I don't know, do you guys have time to just cover this? I wanted to talk about what I was going to call the AI apocalypse. Do you have time for, I don't know, 5-ish more minutes?
Yeah, sure.
Okay. Well, I'm sure you saw the Citrini article. You heard about Block's layoffs. You know, everybody says this is sort of like the first big public company to do massive layoffs due to AI. And I was wondering, like, you know, how you're looking at all of this and how you think this will affect crypto.
I think it's going to have a huge effect on everything, you know, our personal lives, work lives, corporations, you know, building everything. You know, when everything kind of really changed when the most recent models changed from Claude in December, that's really when everything kind of started to change. And, you know, people were all of a sudden kind of messaging saying like, hey, can you build this little thing? And all of a sudden it would like come back pretty good. And, you know, it would have like colors and you can like click around and you're like, oh my gosh, this is crazy. And then the implementation of Claude Code locally on your computer, obviously the OpenClaw thing went crazy. That's just really Claude Code like on the cloud, right? Nothing big there, but it did just go crazy because a lot of like virality over on X. But ultimately, it's just Claude has been kind of the huge breakthrough recently. But I would say every founder and CEO that I know, you know, has now gone from, you know, typing on the computer 95% of the time to talking to it 99% of the time. You know, they have found incredible ways to create efficiencies at their businesses. You know, a great example would be there's like this company called Whisperflow. They've raised like $81 million from like Andreessen and everything else. And you could just, you know, tell Claude to rebuild that and it's, you know, cost you 50 cents and you're done in like 6 minutes. Right. And then there's like all the, that's like that entire company. It's like, you're just really hoping, I'm sure there's a lot there. There's probably a bunch under the hood. I don't know, but like that scenario is happening all across different, you know, any reporting tools that you have, right? Like you're just kind of hitting your original systems and grabbing the APIs. And now you're just kind of like talking to your computer, telling it to create these things. So the efficiencies are there. Now I know a lot of people think that there's not going to be a bunch of layoffs from this and that we're going to, you know, create this kind of like AI utopia. I think we do, but I think it's going to be really rough in the interim. And I think, you know, Jack's way out ahead of it. at Block, and he's making those cuts. But I think other companies have kind of been making those cuts, in different ways. Like Amazon kind of tried to force everyone, to go back to the office, but really they just made you go to a WeWork near you. That was like kind of annoying and hoped you quit. There was like a lot of like that stuff going on as well. So I think it's happening, but I think this next 18 months is going to be really dynamic for AI. And I think, I think crypto is actually built for this in a way. There's been a couple of really good articles about, whether or not your business is going to survive this. Does it make your product better in some sort of way, right? Can you build upon it? Like at LunarCrush, we have all this amazing social data, and now we can like unlock it with AI, right? And like, people can query these massive data sets and they never could before. Before you'd have to like create this UI in your own specific way and talk about the colors and where you want the buttons and all of these things to showcase a cool view for someone to understand what's happening in the market. Now someone can ask any question on earth and have like a perfect, beautiful representation of what that is. I mean, even Laura, before this, I just, sent a little HTML file about like your topics and questions, and it was like, whoa, like, and that's all real time. So it's just going to disrupt everything. And anyone that I know that, is interested in this and has started to use it is never going back to the old way of working. And even, Will, who was on here before, gave that great kind of talk about Zoomers and the disruption there. And, I'm really hoping that generation takes that in stride and, they really continue to use it.
The one thing I was wondering is, I think it was you who, before you mentioned this will really push the adoption of stablecoins. So I guess I'm just wondering, like, will it really benefit crypto, or maybe it does, but like not until 2 or 3 years from now. I don't know. That's the one thing. It's sort of like
yeah. Sorry to kind of jump in, but I think it has like in the short term, stable coins, smart contracts, these things are programmable. And I think you can build really cool, interesting things like, people will build, automated funds, or they'll, there's all this cool stuff with agents that are now trading, on Hyperliquid. And they're kind of going back and forth with these models, and they have their own strategies and they have their own context. Like right now, you probably wouldn't give OpenClaw access to like your bank account, right? And I don't even know if like Chase is going to create like a perfect API that I can then move money in and out constantly. And then what is another big thing would be like, what is the tax, consequences of something like that? And so I think that they're just far away from adoption where, stable coins and DEXs are like primed and ready for like the agent takeover. And, if you're like me and the other people that are working like this today, your head's going to explode when you realize what's possible, 6 to 8 months from now, and it's changing so fast. So yes, it's going to be super disruptive, but I think it will ultimately be bullish for everyone. But I think that there's going to be a 12 to 18 months of some, or maybe even a little bit longer of headaches. I mean, when you see someone like Elon Musk, the sunsetting the Model S and the Model X to even go and build robots now, right? Like the Model X, like you just like tell it kind of where to go, and like it opens the door and like drives you to where you want to go. He's like, nah, we don't need that product anymore. It's like the most amazing product on the earth. And he's sunsetting it because he's like, oh, this other thing's going to move faster. Like that's what's going to happen is these like huge, big decisions by CEOs to transform the way that people work.
Yeah. I think the one thing that you said about, sorry, I just lost my train of thought about the AIs is that, just like, when it comes to crypto, I worry that there's going to be so many mistakes along the way. There was already that one where it gave away like $250,000 by accident because the decimal was wrong. And so it's one of those things where you kind of make this calculation of like, oh, this seems like a really good thing to experiment with. But then it's like, if it goes wrong, it could go like really wrong. So Marcus, what about you? What are you thinking about how this will affect crypto?
You brought up a pretty interesting point. I saw on X, I think it was last week, there was an account that was able to convince one of the agents running one of their tokens to donate like 30% of its token supply to him. And, it's a typical like, oh, my dad has like, cancer, please help. And then the bot was like, sure, here is 30% of the supply. And obviously the guy dumped it.
That was the one, yeah.
Yeah, but so there are some speculation that was, people were hypothesizing that this was all a marketing stint, and that the dev wanted to exit. But I don't really know what the truth is. But to your point, there is some sort of risk here that people are obviously not flagging. But yeah, going back to your question about AI, and I'd like to touch on the block thing for just a couple minutes. I think what block did was people on X are saying block has been bloated for a while, right? And we see the numbers, and yeah, I know block has been bloated, and it's been like that for a couple of years. But then you got to ask yourself, how many other companies that are like block, that has hired a bunch of people, that has resisted not firing. And then now that Block has developed its own AI in-house tool called Goose, and that actually enabled them to automate a lot of the processes. So there was a very good X post on somebody who works in Block. He was basically saying that this tool that they have developed basically streamlined about 70% of their workflows. So if you're a software dev, all you got to do is ask the in-house tool, and they'll build it for you, and it does code testing, it does deployments. So we got to be asking ourselves, like, how many companies have seen this playbook play out? You announce massive layoffs, you get your stock popping 20% on the news, and you just gotta, some CEOs are going to be like, hey, is this a viable strategy? Could we actually build our own in-house AI tool and save some of the cost and streamline some of our workflows? I think there are going to be people considering this, and to Joe's point, I think the unemployment side of this is still pretty much not talked about, right? Like I still do think there's some churn that's going to be had in the market, and where this goes in the long run, yeah, maybe it will help create more jobs like the internet did, or like the railway did. But as of now, it's much easier for a company to replace somebody with AI than create more jobs with in this current market posture. So that's just my 2 cents on the whole block thing.
Yeah.
Now, to crypto and AI, I think crypto and AI is I think I agree with what Joe has said. There's a lot of developments on the agents front. And, AI agents are not going to go through like a gated bank account or something to help you transact. Now, maybe that could work in the future, but as of now, the open source, open network blockchain is probably the answer for now.
All right. Well, yeah, this has been such an interesting conversation. Thank you both so much. And yeah, it is just so interesting because it just feels like so much stuff in the world is just converging. It's like we covered like the war in Iran, we covered gold, we covered, kind of intricacies around how Wall Street and markets work. We covered AI and generational stuff. It just feels like it's all coming together in an interesting way. But thank you both so much for coming on Unchained.
Thank you so
Thanks
much
for
for having
having
me. Yeah.
And thanks to everyone for tuning into this live stream. We will catch you tomorrow.